Everbank is proud to sponsor the How-To series by the Real Estate Board of New York.
On January 15th of every year, the New York City Department of Finance sends out 1 million notices of property value to people who own property in the city of New York. Those notices are also posted on the Finance Department website so that they are available for people to see. The notices contain the estimated market value that finance thinks your property is worth, the assessed value, and in some instances a transitional value. The tax that you will pay on the July 1, the beginning of the city's fiscal year, can be approximated by looking at the lower of the assessed value or the transitional value and applying the tax rate that is appropriate for that tax class property. There are 4 tax classes of property in New York City. Tax class 1, 1, 2, and 3 family homes. Tax class 2 is all other residential property with 4 units or more. Tax class 3 is utility property, and tax class 4 is everything else. So the notices of value get mailed, and you should be looking for those notices shortly after January 15th, because that starts your time to file a protest or an application for correction with the New York City Tax Commission. Those applications have to be filed for Class 1 properties by March 15th, and for all other properties, Class 2, 3, and 4, they have to be filed by March 1st. The tax class that's on that notice of value is what determines when you have to file, either by the 1st or the 15th. The applications have to be received by the Tax Commission by March 1st or March 15th. Putting it in the mail is not sufficient. They have to be received by the Tax Commission by March 1st or March 15th in order to get a hearing. Notice of value will also provide to you the descriptive information that is contained in the Finance Department records. That includes the nature of the building. Is it an office building? Is it a residential apartment building? The construction type, the size of the building, the age of the building, and the size of the tax lot. Those are essential elements to determining the value of your property. The Tax Commission has the authority to review and correct the classification of the property. Is it in the proper tax class? Whether there were any exemptions that were denied or miscalculated, and the valuation. If you believe your property is overvalued, the Tax Commission can reduce the value of the assessment. The Tax Commission cannot raise the assessed value. It can only reduce the assessed value. And if your property has an assessed value of $2 million or more, the Tax Commission charges a fee of $175 for that hearing. You should be very careful in reviewing the notice of property value and looking at that information on it. You should also be very careful in following the instructions and finding the proper form for the Tax Commission application. Different properties require different forms to be filed, and you have to complete the form fully and accurately, including all attachments. If your property is income-producing property, you'll be required to file a Tax Commission income and expense statement. If the property has an assessed value of $750,000 or more, that income and expense statement can be filed by March 24th, after the application is filed. Again, the notice of value will tell you the income and expense that the Finance Department used to arrive at the value for your property. It should look something like what you file on the real property income and expense statement. On the other hand, finance is allowed to normalize income and expense, because you should remember this is a tax based on the value of your property. It's not an income tax. So that if you have a reduction in income or an increase in expense, that may not necessarily translate to a lower assessed value. There is another option if you believe that the physical description of the property as shown on the notice of value is incorrect, inaccurate, they have the wrong size for your building or the wrong use for your property. You can submit a request for review at the Finance Department. That is an informal review. It gives the Finance Department an opportunity to look at that information and to correct their records. It is not a substitute for a Tax Commission application. The request for review does not preserve your right to a hearing before the Tax Commission, nor does it give you the right to continue a protest in court if you're not happy with the Tax Commission's determination.